Hi there, traders, and welcome to Trade the Structure. Now, we saw a massive bounce last night. That's the way I'm viewing it at the moment. So the Bulls finally got the bounce they were looking for. We're just going to recap what happened in the US action and across the board the markets we look at. So we'll kick it off with the ASX 200. You can see the market was obviously it got sold down pretty hard coming into the close. That was a 4 o'clock close, and then basically straight away after that we started finding a base at that 6,900 level. This is a SPY futures. So you started to find a bit of a base there, and we got this higher low. Then late in the US session, you can see this is about 5, 6 a.m. Sydney time. It started to ramp up again. So markets really started to squeeze out a lot of these shorts. And it looks like if you go and look at the indices on the major US currencies, they gapped down on the open. They were grinding higher the whole time. So why they were grinding higher, the SPY and other indices, futures markets were trying to make up their mind which way they're going. But in the end, it looks like it was a bit of a ramp up. It looks like it was pre-engineered to me, to be honest. It was a big flush lower. There's been a lot of sellers coming into the market. But I think it was sort of triggered by Biden. Actually, I'm not sure what time he said it. They're saying that the US is not going to get involved over there and we're just going to use heavy sanctions. And the market was happy with that. Up we go. Okay, and safe havens that thought maybe that's the worst of what we're going to see. Unfortunately, Ukraine won't want to see it that way, but that's the way the market's viewing it at the moment. So it was really just a squeeze. Any markets that were short, say your indices were squeezed, any shorts were just squeezed back out. I don't see it as a new buying opportunity. I see it as more of just a short squeeze, plain and simple. And then we'll have to see what happens from here. But if you want to be a buyer and you think this market's going to bounce back, I would rather see a higher low build, a confirmed higher low that, yeah, we're not going to see any more selling and we're going to start to see some buying come into the market. But at the moment, just that move up there, that big pop and across the board was more buying action. So SPY, I'm just going to see how it opens around that 722. Could extend 755. You're going to get buyers, bargain hunters on the opening to support the market. The ASX 200 is more of no man's land for me. You're going to get the same sort of scenario. You're probably going to be pushing to 71.10. Look, I won't want to buy it here unless we get some sort of flush lower on the open. Flush lower start to hold higher lows, then I might want to buy it intraday. Okay, but for now, we're kind of in no man's land. The Hang Seng, this is the Asian market, so that closes at 6 a.m. That's the futures market. So the rest of it's just CFDs. They're going off the US session. So they pretty much ramped up off that 22,672. They got their rally as well. Big short squeeze in any position. So the futures is going to gap up. You'd say the actual index, the physical index, is going to gap up as well. But we'll have to wait and see how it goes from there. I don't really want to be, like I said, I don't want to be a buyer. These markets are extended and there's still fear hanging around the markets. So I don't really want to be a buyer unless we see some sort of flush lower, like this, coming in flush lower, then start to hold a higher low and ramp up into that close. Otherwise, you might spike and then get this lower high as we drag in some buyers on the open, because you know that the open is going to be quite bullish, considering what happened into the close of the US session. It's going to be quite bullish. There's going to be some bargain hunters out there. See, we drag them up and then basically dump on them again into the close. All right, that's what I'd be looking for if we start to ramp straight back up. I'm not going to look for some sort of move just straight up. Okay, it's going to be too hard to trade considering how stretched the markets are off those lows. Nikkei, same sort of scenario. Okay, you've got this base built at 25,642, big thump up into the resistance zone, a potential resistance zone at 26,265. I might look at one or two things open up and start to chop around that level. Sellers start to come back in, and we see a flush down to 25,610, or even just some sort of flush. Okay, otherwise we might ramp up. If we ramp up and start to hold a bid, great, back at this level, then yeah, if we start to ramp up and then fail, looking for a lower high, okay? But I don't want to see this ramp straight back up, straight back down again, okay, for a sell. I would rather see, this sort of push up and then a little lower high, something like that, before sellers start to come in again. Now, the Dow US markets, you can see they were pretty much, from the start of the European session, holding. Okay, beautiful higher low there, led to that big ramp up. And that goes, like I said, lockstep with the actual indices. Indices at 1:30 in the morning, Sydney time, gapped out on the open and then were bought up from there. So that was the opens, somewhere around here, opened on its lows, after the market being pounded that day through the Asian and European session, opens up, holds the lows, and then starts to drift higher. And we get that really ramp up from about 5:36, and I'm guessing it's just over that Biden announcement. So ramp up, big short squeeze. Like I said before, I don't believe that it's a change in direction, because the trend is still down, and basically across the board, major indices are still down We just had a big blowout to the bottom side and a bit of a retracement, and that's just natural. The market's going to do it every day of the week. It's going to set up some sellers, squeeze them out, or set up some buyers, ramp up and squeeze them out. So you don't want to be late to the party, or you just want to be early. US tech, same sort of scenario. Built that base, held that base, and took off. Okay, this was probably a bit earlier. Now it's 1:30. There you go, ramped straight up from the open. So yeah, it's a really opportunist, I say, for once you get that big blowout through Asian markets and European markets, you're probably going to get some sort of thing on the upside because everyone's in the bear, everyone's positioned one way, they're bearish. Okay, so the opportunities can arise to the upside when everyone gets squeezed back out and everyone realizes that are late to the party. You're not selling in here early. This has been going on for quite a while. The trend is down. Okay, so when you're selling down here through 13,370, you're just going to be fodder, in my opinion, fodder for a squeeze back up, and vice versa for any sort of buying. Big ramp up like that, you're fodder for the squeeze down. So potentially intraday, as we start to come back up into these levels, 14,150 or around here, we might find that a lot of these buyers get squeezed out of the action. We ramp straight back down again. Okay, currencies. Like I said before, the US dollar was taking off, and it turned at about 3 o'clock in the morning, Sydney time. It just went straight down, so it turned, and it was negative after that. So safe havens were coming off. US dollar safe haven buying was reversing. Gold got smacked. That was reversing. Yen, Swiss, all these sorts of safe havens were reversing. Okay, and that's what led to a bit of a bounce, a good bounce in the equity market. So you can see this is the Aussie, bit of a really good push up here, and I think let me just see when that was. So that was the previous session. Fell over in the previous session, and then we opened up yesterday and got smacked straight down again to 71.05, and then we've ramped up as the US dollar got sold off. So this is just the reversion of what's happening with the US dollar safe haven bid. So it'll be interesting to see if it actually holds this 71.80. We might start to flush into it, try to squeeze out some more shorts, because there's been a few shorts squeezed out. You can see that capitulation and bounce straight back again once we took out some stops below 71.05. Bounce straight back. We may be a bit grindy. I don't want to get any short on until I see a lower high. Okay, and I think that we potentially, if we do something like this, we start chopping around here, then maybe looking for a lower high. Okay, but if it continues on up, so be it. I find it hard to be buying into those things. Big V-shaped reversal. I find it hard to be buying into that. If you're going to buy into that, and you're going to buy, fair enough, you're buying off the MAs, then it's going to be on that smaller time frame, not the 30-minute. Euro, same sort of scenario. US dollar was rallying here. US dollar gave up some of the safe havens, closed out. So the reverse went down and Euro went up. Okay. So we found that low down at 111.27, reacted up and off that. If I want to be a longer term buyer, I want to see a higher low. I don't want to see this sort of action. I want to see something that chops around here. And you can see that sellers are starting to sell it back down again, but they're getting soaked up at a higher level. Okay. That for me would be a good move to that 12.80 area. Okay, pound, same sort of area. It's been smacked down. It's reversed straight back up with that V-shaped recovery. Now, it's a big flush at that level, 33.72. Now, whether it can start to hold up here, or we start to hold a higher low. We start to hold a higher low. There's going to be a bigger retracement, okay, and a bigger pullback. You'd say of this move down. So you'd be looking for me anyway. I'll be looking for maybe something like this to hold, and then look for that extension back up to the upside. So at the moment, shorts could still be holding. You've taken some profit along the way. If you haven't, you're not trading it very well. But any shorts in here that come off here, you would have been taking some profits along the way. You might have a remainder going. There's still going to be some shorts on, but as soon as you start to see it hold up at a higher level comparison to this, then you're looking for that deeper retracement up, okay, and deeper retracement, deeper squeeze on those sellers. US yen has held up off that 114.52 area. Yep, 114.52. Now I haven't got Europe up there, so I'll have to open up in a minute. Held up off that 114.52, bounced straight off that, and that's as you get the safe haven yen getting sold back into. So the yen is getting selling, the US dollar is getting selling. It's just that reversal of what we've been speaking about. So when it's a safe haven bid, you got the US dollar rallying, yen rallying, but yen's rallying more. So there's kind of a movement down in that pair. Okay, so it's just a reversal of that, if you ask me. Held up 114.52 nicely, ramped straight up through 115.28. We've come into another level, 115.64, 66.4. Okay, whether that holds is a different story. It sort of was traded off off that level before, off again, went through, straight through, and it chopped around there for a while, went back down. So we're back there now. Are we going to do some work there before we roll back over again, or are we going to continue our way up to 116.33? We'll have to wait and see. Okay, so obviously largely dependent on that US dollar. So US dollar story, we got out of hand on the upside with regards to, I think it was kind of trading around equilibrium. Yeah, it was chopping around a bit, but as soon as this Ukraine situation kicked off, it found a safe haven bid to push it straight up. Okay, whether it's coming back down, it's going to start finding back below that 97 area. It's at 97.05 at the moment. If it can push back down below 97, say 96.50, that area, then yeah, safe havens come fully out of that, and we'll have to wait and see. And then that would mean that if it's going to go back below there, you're going to get some creeping up in this maybe more rally into the yen, but more specifically, you're going to get pound, euro, and Aussie. Okay, if the US dollar is going to go lower, they're going to go higher. Gold, now gold got absolutely belted, so it seemed to be more of safe haven bid in here, safe haven bid disappeared. Okay, they all ran for cover as soon as we started getting this lower high come to play. Now you've got to realize that if you're going to be buying it because of some sort of reason, if that reason changes, you've got to get out. You can't just hold it and expect we're going to the moon. Okay, so you got to trade it for what it is, and that's what we saw. We saw the market power up, big extension of that 1910 level, and then come falling straight back down. Now the way that unwound is a bit of concern for longer term. Maybe now that safe haven buying has disappeared, maybe we're going to be talking about higher US dollar, some strength into the US dollar, continued strength because of the inflation rate cycle or that interest rate raising cycle. If that's going to be the case, then we could see that gold starts to drift lower. All right, there's going to be a lot of people that bought it in here and then held it and got crucified. Basically, that's a nice little buying entry, but you've got to know where your stops are. If you're going to buy it in this zone because of that entry, you've got to have your stop below that, and you've taken a small loss on it, or you've taken it off on that lower high. You've got to trade it accordingly to the price action. You don't just buy it here, hope for the moon, and don't get out below there, because as soon as it gets below this kind of region, that trade has been negated. It's no longer a long. All right, so just talking through some positions, the way that's recovered, the way that got smacked down again, it just makes me a bit nervous that we could be seeing a reaction down off 1910. All right, let's go over to, we just move a few things around. We'll go over to crude now. Now see that reversal in crude again, buying it into because of what's happening. Safe haven, not so much a safe haven, but buying because the expectation is going to be limited supply because of what's kicking off. Once that gets turned around, and I think Biden actually said something, Biden's actually said something about securing oil resources, then that negates higher prices, okay? And you would expect this to start drifting down. So anyone who's been buying it on the back of that Ukraine-Russia situation may have to rethink their positions. Okay, so whether we start holding below this 93.7, we might see a bit of a pop and it start to fade again, get another lower high and a deeper correction. Or if we start, there's two scenarios you want to be looking for. You want to start to see if it can hold, and then we might see it a bit drift higher again, which the oil companies would like. Or we're going to get some sort of move up and then get a lower high and get a deeper correction. Correction down, meaning back through, back towards that 90 zone or through that. Okay, so that's what I'll be watching for. I think this is a big blow off top of all the strength that we've seen lately. Maybe a big blow off top. If that's a big blow off top, then you're going to see some lower prices and a bit of a squeeze on those longs have built up for a while now. Copper has, we were speaking about this potentially heading south yesterday, and that's sort of what's happened. US dollar is not so linked to the US dollar. It's sort of, you can see it ramp up. What time was that? Ramped up into about 9:30, so in the European session, ramped up, retested those highs and come screaming back down again. Okay, that's not so much, the US dollar was coming down late in this move, but copper kept heading south. So whether the copper's looking at, okay, we're getting a bit extended here, we've got a good zone, we reacted off of here. The fact that we've tested into it and reacted straight down off it could be a key lower high. We could be working our way down to that 97.08, 97.10, this zone here, or even further down to this zone and retest some of these lows. Okay, we'll wait and see what happens with that. Last two we'll just look at is Bitcoin and Ethereum. They got carried away once the indices started to rally. Once they started to take off, they look like they're completely linked to what's happening with the action in the US index market. The S&P, the Dow, and the Nasdaq. Okay, we got the fear that was driving it lower. market started to creep higher and then ramp straight back up as there was no real selling, continue to come in the Dow and the Nasdaq on the open. Then they ramped up along with those indices, and it's the same with Ethereum. So I was really looking maybe it'd flush into this level 27.48 and we get a lower high to work off, but it doesn't look like it's going to happen. Whether we start to get a bid around here 25.90, we'll have to wait. And it's the same with sort of Bitcoin. I expect a bit more of a move down. That was a good move off that 38,850 zone. We could still chop around here and then get a deeper correction, and then you'd be looking for a bit of a sell as some of these buyers have to get squeezed out. Now, I was going to get at the European charts. Not much to see there. They were down on their lows. Actually, we'll get them up. Let's get into popular markets. Just get up the DAX. We'll look at the DAX there and the UK. Come up for us. There we go. So this is just some notes I was taking last night, looking at it, sending it to the forum. You see that it's actually, we've got a good little bounce, and that was in the European session. Markets popped up. Now, what time was that? That was a bit earlier. It was the start of the European session, came up, straight back down again, and then we started to drift away higher. Yep, that's about right. So that was the European Open, come back down and retested those lows, and then they ramped up. Okay, so the European indices itself close at 3 a.m. This market goes till been a CFD, and they follow in the futures goes till 8 when it closes, and it reopens a bit later on. But you can see they pop back up. Still, I mean, that trend is down. We could just have a bit of a retracement to that 14,440 zone before we fall over. Otherwise, we could just drift in, find another bid at 14,160. But for now, I want to see if I'm going to go long, if I want to be a good longer term long, I want to see a decent pullback. I want to see a decent high low. That's not a high low at all. These aren't little high lows, they're just minor. That's just that's your move down. This is a retracement. So if it's another move down, then you're sort of taking from this leg, you're looking at that leg. And if that's the case, then you're going to get back to here. You've still got a lot on the downside on the move, a move down. A lot of room to move on the downside is what I'm trying to say. So UK, get rid of that. 30-minute chart, you can see that's big flush of these lows is what is interesting. Big flush of that low at 72.39. So you can see that was a close. European trade started around here. Market popped up, sold down, got smacked down again, went through the lows, big flush of those lows before we ramp back up. So if we come back down and test 72.39 and start to hold, then I'll be looking for a deeper pullback, okay? Meaning we start to come into here and we start to hold that zone, then I'm looking for a bigger pullback, back up, an opportunity off a higher low. Right, that's pretty much all I wanted to talk about. We covered all the markets, so just be wary today on the open. Don't chase the market because it doesn't mean it's over. The trend down is not finished. It's just a big retracement, a big short squeeze. Now, if it is just a short squeeze and we start to see a key lower high re-establish, there could be more movement to the downside. Okay, so like I said, don't start chasing the market on the open because it's probably going to open up stronger. You're going to get those bargain hunters jumping into the indices. Now, if we have a bit of a pullback, especially on the ASX market, a bit of a pullback here to start to hold, yeah, you could probably go long into that. But for now, I'll just be waiting to see some action play out once we get underway. All right, guys, thanks for joining me and have a good weekend. Stay safe and we'll speak again soon.